Hi, I'm Ingrid Zip and welcome back to my YouTube channel where we talk about entrepreneurship, finance, and technology. The topic for today is going to be incorporation. Should you incorporate as an LLC, as a C Corp, or as an S Corp? What are the differences between these legal entities and which one will let you pay the least in taxes? First, we're going to talk about personal liability protection. All three organizations, an LLC, a C Corp, or an S Corp, will give you personal liability protection. That's kind of the point of incorporating a company. It basically means that if you go bankrupt as a company or if your company gets sued, that your personal assets are protected and that your personal assets are considered separate from the assets of your business. There are two main types of taxes. There are corporate taxes and employment taxes. First, let's talk about corporate taxes. An LLC is a very flexible legal entity. An LLC can be taxed as a disregarded entity, as a C corporation, or as an S corporation. By default, an LLC is taxed as a disregarded entity. This means that if you're the sole owner of your LLC, then you're getting taxed as a sole proprietorship, or if you have another business partner, you'll be taxed as a partnership. Being taxed as a disregarded entity means that the income passes through the LLC, is not taxed at the corporate level, but then is taxed as individual income and is taxed according to your personal tax bracket. This is the default tax election for an LLC, and in order to be taxed as an S Corp or as a C Corp, you have to file special paperwork to get approved to be taxed as such. If your legal entity is an LLC and you want to be taxed as a C Corp, you need to file Form 8832 with the IRS and get that approved to be taxed as a C Corp. If you want to be taxed as an S Corp but you have an LLC, you need to file Form 2553 with the IRS and get that approved in order to be taxed as an S Corp. Now let's talk about C Corps. Most big companies are C Corps. C Corps pay corporate income tax on the company's profit. If the company distributes profits to its shareholders, then those shareholders pay income tax on their holdings. C Corps are taxed at the corporate profit income level and at the individual shareholder level, so they can end up paying more in taxes than LLCs and S Corps. All corporations begin as C Corps, but they can file a special application if they would like to be considered an S Corp. These are the requirements necessary to become an S Corp. You have to have 100 or fewer shareholders. Shareholders cannot be partnerships, corporations, or non-resident aliens. And you can only have one class of stock. S Corps actually don't pay corporate income tax. So like an LLC, they have a pass-through process where corporate income tax is not paid, but then employees and shareholders pay taxes on their earnings from the corporation. So now let's talk about employment taxes. These are the taxes that employees of a corporation pays. With an LLC, the owners of the LLC are actually considered self-employed. So the LLC doesn't pay any percentage of their Social Security or Medicare taxes. The self-employed people within the LLC must pay the full tax, 15.3%, which goes to Social Security and Medicare. 15.3% is the percentage that the self-employed person will pay up to $118,500 in income, and then above that they pay an extra 2.9% in Social Security and Medicare taxes. An LLC that's being taxed as a C Corp or an S Corp has the same employment tax rules as those entities. So that being said, let's talk about employment taxes for a C Corp. Any corporate shareholders who also work in the business are considered employees of the C Corp. The corporation usually pays half of the Social Security and Medicare taxes of their employees, and they take the other half out of the paycheck of the employee in order to pay to the government. So the corporation will usually pay like about 7.6% of Social Security and Medicare taxes for the employee, and the employee pays the other 7.6%. So that's when you hear about the employee matching for your Social Security and Medicare taxes. One way that shareholders within a corporation can actually pay less taxes is by taking a lower salary and keeping more of their benefits in shares. But it is required by the IRS that each employee takes a reasonable salary. So you can't just decrease your salary to zero and then hold all of your assets in shares of the company. You have to take a reasonable salary, but it could maybe be smaller than your shares are, for example. Let's talk about employment taxes for an S Corp. Similar to an LLC, S Corps do not pay corporate taxes. Their employees are taxed on their income in whatever tax bracket their income falls into. Similar to a C Corp, employees in an S Corp can sometimes minimize their tax burden by taking a smaller salary and keeping more of their assets in shares in the S Corp. Just for clarity, let's go over the advantages of these different organizations and their tax laws. Let's talk about the tax advantages of having an LLC. You have the ability to be taxed as a disregarded entity, which is a pass-through organization, meaning it's not taxed at the corporate level, even if your business does not qualify as an S corporation. LLCs also have simplified tax filing. An LLC being taxed as a disregarded entity does not have to file a corporate tax return. And a single member LLC need only file a personal tax return. There's also a lot of flexibility with an LLC, so if you want to be taxed as a disregarded entity this year, but later on convert to being taxed as a C Corp or an S Corp, you can make that transition along the way. There are also some advantages to being taxed as a corporation. Corporations can minimize the Social Security and Medicare taxes imposed upon employees by having a corporate match. S corporations can receive pass-through taxation. C corporations can actually benefit businesses that plan on keeping money in the bank instead of distributing it to shareholders. Money kept in the bank in order to continue growing the business can actually be taxed at a lower flat corporate rate. Some retirement plans, stock options, and employee stock purchase plans are only possible within C corporations. C corporation employees also do not pay taxes on certain employee benefits, including healthcare benefits, life insurance benefits, employer contributions to flexible spending accounts, and health savings accounts. LLC members and S Corp shareholders who own more than 2% of the company must pay taxes on these special benefits. I hope this video was informative. I hope you learned something about the difference between an LLC, a C Corp, and an S Corp. I don't know what's right for your business, but maybe this video will help you figure that out. So definitely give me a thumbs up and subscribe to my channel if you like this video. And then also, if you're looking to learn to code, check out the online course that I've created. It's for beginners, so JavaScript, HTML, and CSS will definitely be covered. Honestly, like of everything I know coding, like I've literally made the most practical and useful resource that I could possibly think of for beginners. So you'll learn to build a personal website that's like a portfolio website and upload it to Google Cloud and host it there. So, yep, if you're interested in any of that, check the links below. Otherwise, I'll see you in the next one. Peace. Later.